A phrase that is used a lot to scare people away from whole life insurance is when you borrow against your cash value, you have to pay interest on your own money. That'd be like saying you have to pay interest on your own money when you take a line of credit against your home, because you'll find borrowing against real estate and borrowing against the cash value in a whole life insurance policy are very, very similar. They're almost identical. So how it works when you take loans against a life insurance policy is the amount that you borrow, you have to pay interest on it. And I could see how someone would say, okay, if that cash value is my money that I have access to, when I borrow against it, I have to pay interest to the insurance company. I feel like I'm paying interest on my own money. And you could make that argument. My peers in the industry would say, no, you're borrowing the insurance company's money, technically how it works. However, when you take a policy loan, you are going to pay interest to the insurance company. Just like if you were to take a loan against equity in your real estate, you are going to pay interest to the bank. Here's how it works in your benefit when you borrow against your life insurance policy. When you take that loan, yes, you're paying interest to the insurance company. However, the insurance company is still paying you dividends and interest on that money you borrowed. To illustrate, you have $100,000 in cash value. You borrow $50,000. The $50,000 you borrow, you pay interest to the insurance company. However, the insurance company continues to pay you dividends and interest on the full $100,000. The $50K that you borrowed and also the $50K that you did not borrow. We can call this your remaining equity. Just like what would happen if you have a piece of real estate that's valued at $100,000. If the fair market value, call it the appreciation rate, is 5%, if you take a loan against that real estate, what happens? You pay interest to the bank. However, if the fair market value appreciates by 5%, it's on your entire property, not just the remaining equity. So I hope that illustration made sense. Let us know if you have any questions. Thanks so much for watching.